Joining us now from Washington is Dale Stafford, a Bain Company head of mergers and acquisitions. They just came out with their inaugural M&A report that shows 2018 delivered $3.4 trillion in strategic deal value. So, shine the spotlight on 2019. What's going to be the biggest theme for you?
Good morning, guys. At Bain, we think that there are a couple of big developments that will define 2019, and those are the rise in scope deals and capability deals. And let me double click on each of those and describe what those are. When we're talking about scope deals, what we're talking about are situations where a company is buying into a new market, a new business model, a new product where they don't have a position today, where they're principally trying to achieve or goose their top line growth. And then capability deals are ones where where companies are buying into an entirely new capability that they don't have internally today that's going to allow them to grow faster. So as we look to 2019, we think sort of the biggest development we're going to see is a continued increase in scope deals and capability deals.
I guess the question for me is, well, why? I mean, is it going to be because growth is so hard to come by? Is it because the environment's actually getting better so you can go look for organic, go buy growth in that way where you couldn't, say, a year and a half ago? Or is it going to be activist investors or private equity sort of advocating for something like that?
Right, all of the above, really. As you guys have talked about here on this broadcast recently, in Europe, for example, growth is slowing. But if we pan back and look not just over the last year, the next quarter, but over the last 20 years, what we find is that for publicly traded companies, revenue growth has been especially hard to come by. In fact, the average growth rate of publicly traded companies has been decelerating, has been declining over time. And so the natural antidote to that is that companies look into the M&A market and look for new products, new categories that are growing faster than their core business in order to drive that kind of growth.
So, Dale, that's good. Oh, sorry, Dale, I was just going to say that's good news for scope mergers. On the other hand, in your report, you also point out that there's some suppression of interregional, that is to say, global sorts of M&A because of geopolitics.
Yeah, that's exactly right. There has been and will continue to be a lot of scrutiny on cross-border deals. The agency in the U.S., CFIUS, which scrutinizes cross-border deals, and the analogous agencies for the EU and Australia in particular have been particularly critical of cross-border deals. And candidly, what everyone is most anxious about is China, is making sure that critical technologies that Western companies and Western governments don't lose control of critical technologies to the Chinese.